What is up, guys, and welcome to another edition of Market Marauders, beating the market one trade at a time. If you're new to Market Marauders, investment channel helps you to find the best deals in the market. That's something you're interested in. Make sure that thumbs up and subscribe. Definitely helps the YouTube algorithm promote the videos. All right, so I'm gonna give you my option picks for the week. So let's jump into it. It's been a crazy week. A lot of plays been going on overall, but overall fun experience trading. Doing some day trading, some options trading, some penny stock trading. Overall, I had fun this week, but let's jump into them. So the first one, we got ticker sign ZM. That is for Zoom. They ended the week at $473.60. And they are bullish at the time of this video, denoted by the moving average 10 line, which is this red line, being above the moving average 50 and 100, which is this purple and yellow line. So they are bullish. It looks like they touched $472.04, and then afterwards just continue to rally up. So I would look for them on Monday to be an early morning mover. Seems to be a lot of volume and a lot of overall growth from the company based on this chart. So go to some background information on them. They do have an earnings coming up, so that could explain the potential rally that's coming, that has came. So on Monday, they do have an earnings. Now, for me, I think Zoom is a pretty good company overall. I think a lot of people will continue to use Zoom even once there's a vaccine coming out. But, from when the news came out about the Pfizer vaccine coming out, I do know that Zoom fell quite a bit. So I do think it'll be a similar sort of thing once there's FDA approval of the Pfizer vaccine or the Moderna vaccine or the AstraZeneca vaccine. But there's still going to be huge hurdles that those vaccines have to encounter, which are going to be distribution. And I think Zoom is still going to be used for a lot of other companies. A lot of companies have, vowed to do permanent remote work. So I don't think a company like Zoom is kind of here to stay. And other things like sports and things of that nature, I think are not going to open up as fast, even with the distribution of the vaccine. I think it's going to be a while. So I think Zoom is still poised to be a very good stock for the future. So with that being said, I'm going to jump into the option side of Webull. We're going to type in ZM for Zoom. And then we're going to go to February 19th. And then on February 19th, I think a call is probably the best option just because I think Zoom is going to continue to go up. Even though it may see a slight fall off once there's an approval of the Pfizer vaccine. I think it's just going to be, market reaction. People are going to say, oh, no one's going to use Zoom again. But I think it'll rally back up once more after that immediate reaction. But I think a call in general is going to be a good thing for Zoom. I think a call with the expiration of February 19th of 2021 is going to be good. Between 40 to 500, in my personal opinion, I think is a good strike price. So you look to pay between $6,240 per option to $5,470 per option at the time of this video. Bear in mind, this is all financial. This is not financial advice. This is just for educational purposes. So just bear that in mind. Also bear in mind this is based on a stagnant price because the market is currently closed. So when the market opens, these numbers will all change, but you need to bear in mind the strike price, which are these numbers, and the expiration because those are stagnant. So jump into the next one. We have ticker sign DOCU for Docusign. They are bullish at the time of this video, ending the week at $226.65. They are bullish, doing it by moving average 10 line, being above the moving average 50 and 100, which is purple and yellow line. I think a company like Docusign definitely is overlooked, in my personal opinion, regardless if we switch from people switch from remote work to non-remote work. I think Docusign, along with Zoom, definitely helped people make that transition into work because all documents need to be signed. Whatever field of work you're in, documents need to be signed, like paychecks and things of that nature. And if you can do it digitally, it just helps the seamless transition between the potential to work remote or the potential to come back into the office. So I think Docusign is kind of here to stay, just like Zoom. They do have earnings coming up. This is their information for their earnings. Lots of good information you get from earnings. There's a call-in number, and then they have the password on here, which is right here. So here's the passcode, then here's the call-in number. You can also do it through their website. Just click on the link right here. So there are a lot of good information for earnings. It definitely helps see the direction of the company. Also, you'll hear a lot of information financially on what the company is doing, how much money they made. And those numbers also are good catalysts for volatility for the stock. So if you're familiar with trading options, volatility is the number one thing, in my opinion, that moves prices for options. So the more volatile a stock is in either direction, whether that's a put or a call, the better it is for that option to actually execute and you to take profits. So with that being said, we're going to go into the options side of Docusign. So DOCU for Docusign. We're going to go at the same time on the February. Well, I don't have February, so we're going to go January 15th on this one. So for January 15th, I think Docusign is a very valuable company. I think it's undervalued at the current moment. And with that being said, I think a call is the best option between 230 to 260, I think, or even this 270, I think is a reasonable place that you can see this stock easily get to. Now you're looking to pay between $1,815 per option and $645 per option. So just bear that in mind. It's based on the market being closed. These prices will change as soon as the market opens. So bear that in mind as well. So these prices are going to change how much you pay per option, but these prices are stagnant, and this expiration date is stagnant as well. Stocks also tend to rally closer towards earnings. So look for a lot of volatility going on in between when earnings happen and before earnings. So going into next, we got ticker sign DG. So Dollar General, I think, is also a slept-on company. The one in the town that I currently live in, I know was open during the whole pandemic. They were considered essential. So for a company like that to be considered essential, I know when the whole toilet paper thing happened, DG was definitely one of the companies that was definitely out, as well as Walmart and other companies, but I know DG was out, so it seems like people were not afraid to shop there like they would be in other stores. So people definitely came in, bought a lot of items. The amount of people that I saw going there seemed to increase during the pandemic. Now, I don't think we're going to have, a scare just like that. I don't think, the market as a whole is going to shut down and stuff like that. But with lockdowns and curfews and things of that nature going on in different states, I think you could potentially see people buying more or stocking up more, and I think a company like DG will definitely benefit from that, since they were considered essential during the pandemic. So I would put them in the almost recession-proof category because they were deemed essential, and people actually went into these places to shop, opposed to trying to buy things online. So they don't really have an online presence, which you would think is a negative thing for them, but is a positive because their locations and where they're actually located, I know they do in a lot of small towns. And that's kind of how they're strategically playing. People in small towns are not really going to go out and buy things online. They're going to go to their local Dollar General or Dollar Tree or Family Dollar, or places like that that are scattered in those locations, which kind of works as the town service store. So in places that aren't big enough to have a Walmart, there are Dollar General. So I would say they definitely were able to take advantage of that. And going into some background information on them, just reading highlights of their press releases. It says it extends its mission through annual holiday support. It says they gave approximately $50 million in additional employee appreciation bonuses. So they definitely, paid people more, especially, being frontline workers or people who had to stay because the business was considered essential. Then they said they announced their 17,000 store opening. DG to me is one of my favorite stocks. It was also, their headquarters in my hometown of Tennessee, or my home state of Tennessee. So, I think their headquarters is in Lebanon or Goodlettsville, one of the two. But I definitely support the company because they're from my home state, and I think that their business model is amazing because of the places and locations that they choose to place their stores. There's a lot of research that goes into that, and I think it's a very good strategic plan overall for the company. I think the company's moving in the right direction with that. They do have earnings coming up, and yes, Goodlettsville, Tennessee. So Goodlettsville is their headquarters. And they do have earnings coming up. It's going to be on the 3rd of December, where you can call in this number. The same thing. Click on here. But a lot of good information from the company. They'll tell you strategic moves that they're doing forward. Sometimes when people can call in, have investor questions. So overall, I think good for people to listen to as a whole. To get information on whether they should or should not invest into the company. So this video is not telling you whether to invest or whether not to invest. This is just pointing you in a direction, giving you, information that some people may not be able to find. So going into the option side, we're going to type in ticker sign DG for Dollar General, and then we're going to go see if they have a February one. So February 19th, I think is a pretty good one. So we're going to go between 220 to 250 or 260. So I'm just saying this whole lot right here, 220 to 260 for a call. I think you pay you'll pay between $910 to $80 per contract. Now, on here, you'll see that this portion is kind of in red just because it went down just a little bit. But I do believe, they definitely have potential to get up to that price. Now, February, a lot of things are going to happen in between that time. But I think, business is going to continue to go up, especially considering you see that they opened their 17,000th store. So they're still expanding business-wise, which is going to bring more revenue to the company as a whole. So I think in overall, the company has a good outlook on their future, especially, considering that they're basically recession-proof by staying open during the pandemic. So going to the next one, we have ticker sign FDX, another Tennessee-based company. And I think their headquarters is in Memphis, Tennessee. So they ended the week at $287.01. They are bullish, denoted by the moving average 10 being above the moving average 50 and 100 on here, which is purple and yellow line. Background information on them. Just going to read some of the press releases. It says Dell Technologies and FedEx switch team up to deliver xScale multi-cloud capabilities to Edge. And then they're talking about small business and View. One of the reasons why I have them on here is because I think this company will definitely benefit from their stock is already pretty high, in my personal opinion, given based on peak season. So peak season for them, I think, has already started. I think it starts in November and then ends like after the New Year's is over. So they're currently in their peak season, and their stock is already, close to really high levels. Then also you have to bear in mind, one of the articles that I read, they're going to be part of the distribution process for the vaccine. So that's going to be huge for them. It's going to be, basically a certified contract that comes out. So I think FedEx and UPS will definitely benefit from being, part of the distribution line for the vaccine. So if that's true, if that rumor is true, I think, FedEx is poised to take large advantage of, the amazing capabilities that they already currently have to distribute that to the people who need it. So going into some background on them for the option side, we're going to type in ticker sign FDX for FedEx. And we're going to see if we find the February. So don't have February. So we're going to go with the January 15th one. And I think for me personally, a call is the best option. And they're at 287.01 where they ended. But I think with all the things coming up with the company, I think they could definitely, get closer to that $300 range, which would be an all-time high for them. So looking at them, I think between 290 to 310 is a good option for a call. Now you say, okay, it's red on the side. Is call really the best option? I think that if they're part of the distribution of the vaccine, then definitely they'll go way past this because they'll have a certified contract. Now, FedEx works differently than UPS. UPS is union. FedEx is all independent contractors. But FedEx being independent contractors, they definitely have the capabilities to distribute those things. They wouldn't have to do anything special to their current delivery fleet by like retrofitting any vans. But I definitely think FedEx definitely has the capability to help as far as distribution is concerned. They have the logistics system in place to help with distribution, and I definitely could see, the government calling on them to help deliver some doses or potential doses of the vaccine to different places. like healthcare facilities, or wherever they deem the CDC deems essential places for distribution. So you're looking to pay between $1,600 per option to $765 per option at the time of this video. So going into the next one, we got ticker sign AMZN for Amazon. Now they are bearish at the time of this video. They're by the moving average 10 line being below the moving average 50 and 100. So they are bearish, even though they enter on a positive note. So just bear that in mind. Whenever you watch this video, they are bearish. From when I did my analysis, looks like they went up and tested the moving average 50 line, but then got basically smacked and clapped back down all the way down here, and looks like they tested it again towards the end of the day. Now, if they break through here, I would say that a bullish pattern is starting to begin, but I wouldn't confirm that bullish pattern is confirmed until this moving average 10 line goes all the way above both the moving average 100 and the moving average 50 line. So that's just the way I do my confirmation. People may do a confirmation by just showing the moving average 10 line being above the moving average 50 and say, okay, it's bullish. To me, I've seen the moving average 10 line, or the moving average 10 go above the moving average 50 and then immediately come back down. So I try to use both of these lines together as a confirmation once the moving average 10 goes through here that it is bullish. So that's just the way I do it. You can trade whichever way you choose to trade. So that's on you. Going into some background information on them, says that they launch IP Accelerator in Europe to help small businesses protect their brands and tackle counterfeit. AWS announces general availability of Amazon managed workflows for Apache Airflow. Then there's a lot of stuff that they have going on. Amazon is constantly doing things, but one of the things that I think that they'll benefit from is this holiday season. Now, Black Friday is today. It's the time I'm filming this video, but we have Cyber Monday coming up. So on Cyber Monday, people are going to be online buying a lot of different things. I think that's where we're going to definitely see Amazon shine. So a lot of companies are switching to having a focus of Cyber Monday, but I don't think, they really have the infrastructure capability of, incorporating all those things as much as Amazon does. So I'm definitely looking forward to see those sales numbers on Amazon, coming out closer to their earnings to see how they actually, as a company overall, were able to perform during this, I guess, pandemic season when more people are going to buy things online. So was, people not going to the stores, making people say, okay, well, I might as well just buy from Amazon. Also, you got to bear in mind, Amazon is setting up their Amazon pharmacy, which they're trying to roll out as well, which is going to have capability to buy prescription medication from Amazon. So I'm interested to see, how that rolls out, more information on that, as well as their sales numbers for this holiday season for Cyber Monday and Black Friday. So with that being said, going into background information, going into the market on them, we're going to type in AMZN for Amazon. So on Amazon, we have, going to find that February date. So yeah, February 19th on here. These are extremely expensive, but, I think they're definitely potential for them to reach these prices. So if you look on here between 3,200 to 3,220, I think a call is the best option in my personal opinion. So look, pay between $21,550 to $20,625 per option. Now they are expensive, a little rich for my taste. I would say, try to find a deal on Robinhood. I know Robinhood I was able to execute and get some for a lot cheaper. Now Webull doesn't have them on here right now for that much cheaper, but different people have different funding levels. So cheap for one person may be expensive for another person, and expensive for one person is cheap for another person. So this may be reasonable for some other people, but I would say, make sure you try to check all your different brokerages that you use to try to make sure that you can execute in a place that you can afford. Now, if this is way out of reach, I would say, don't do anything crazy. Don't spend your whole check on this. Make sure you're executing risk management when you're doing this, doing trades that are, this risky or have this much volatility. So, make sure you do your due diligence and just remember this is educational purposes, just to point you in the right direction. And if anything, you could just put it on your watch list. So, going to the next one, we have Tullahoma NIO for NEO. If we look on here, they are bullish at the time of this video, done about moving average 10 line being above moving average 50 and 100. So, let's look at that. They ended the week at $53.92. So pretty good metric for them. Background information on NEO. I know this is kind of old news or semi-old news for you guys who follow NEO closely, and there are plenty of YouTube channels on there that talk about just solely NEO and Tesla. So they may go more in depth on here, but basically the nuts and bolts of the information is financials and deliveries. So just going to read some of that for you. It came out the 17th for you all who may not have gotten that information from other channels. So basically, their total revenue reached $666.6 million. Quarter deliveries of the ES8, ES6, and EC6 were 12,206 vehicles. Their quarterly vehicle margin reached 14.5%, and quarterly gross margin reached 12.9%. So they basically have increased the amount of money that they've made, and they've increased the amount of vehicles that they've delivered. So overall, in my opinion, I think NEO is doing really good. They've gotten a lot of upgrades from different financial institutions. I think they got an upgrade again today from another financial institution. So the EV market in general, or EV bubble is what some people are calling it, I think it's going to continue to grow. I think it's going to continue to go up as time goes on. And with that being said, I don't think the bubble is over. So I think the bubble is, maybe midway through. I know a lot of people are talking more about EV stocks. I see a lot of older investors getting into EV stocks. So it's not just like a millennial trend. I know a lot of people are saying, oh, it's millennial money. It's those Robinhood traders out there, just eating up all the NEO shares. They're just, going and making all these spec plays, or people who are like, oh, it's just those Wall Street Bets people out there just buying up shares because it's posted on Wall Street Bets. So, I mean, yes and no. There are a lot of people on there who go on financial forums just like this one, or, go to Wall Street Bets, or, go to different YouTube channels and say, oh, NEO looks good, I'm just going to buy it because people are saying it's good. So there are people out there who buy it just because other people are saying that it's good. But overall, there's a reason for it. So there's a reason why it's going up. So it's kind of based on hype as well as fundamentals, in my personal opinion. So fundamentally, the company financially is doing really good. And then what's adding fuel to that fire, people are buying it because other people are saying that it is good. So there are people who are doing research and aren't doing research are both benefiting from having NEO in their portfolio. So with that being said, I think strike price, or starting with the February 21st expiration date, I think a strike price between 55 to 70 is a good value. Now 70 has kind of been the price range that I've seen a lot of investors or a lot of firms say that it could potentially get to. Realistically, as time goes on, I could see it going, up to 80. I mean, look at how high Tesla is. But, this is a Chinese-based company, so they operate a lot differently than U.S. companies do. So I can't really, in my opinion, gauge what regulation-wise or production-wise that they're available to do over the U.S. So I'm still looking at them as kind of a spec play. So I'm going to say between 55 to 70 is a realistic value to get by this expiration date. So you're looking to pay between $1,135 per option to $715 per option contract. All right, so going to the last one on here, we have Tullahoma SQ, and that is for Square. They ended the week at $212.30. They are bullish at the time of this video. They noted by the moving average 10 line being above moving average 50 and 100 line. So really good metric for them overall. So yeah, pretty good for them. So going into some information on them, one of the press releases that recently came out that I think is pretty big news is that Cash App announces a definitive agreement to acquire Credit Karma tax. So Credit Karma is, people use it all the time, get your credit score. But I think, them partnering with Credit Karma was really good news. I think people are going to definitely, latch on to that and use that information. They also had their third quarter 2020 results that came out pretty recently, which I'm not going to go over. You all can go over and read that. But I think overall, strategically as a company, they're making a lot of the right moves. I know it's one of the funds that's in one of the Cathie Wood's ARK Invest funds. Square was one of the ones that had a large portion of their fund. So I know Square has a lot of popularity, especially for millennial investors. A lot of people that I know invest into Square. So I think it's an overall solid company, and they definitely showed by having good financials during the pandemic, as well as recovery from the mini recession that we had in March. So with that being said, going into some background on them for the options side, we're going to look at Square. We're going to try to find a February date. They don't have one, so we're going to go January 15th. I think between the $220 to $260 value is definitely reasonable, especially considering how much it's going up and the different things that they're doing, like the acquisition of the Credit Karma tax section for the Cash App. So there are a lot of good strategic moves that the company is doing, in my opinion, and I think that will definitely help the company as time goes on. And for this option, I think a call is the best option. You're looking to pay between $1,345 per contract to $410 per contract. Now I want to go back over these real quick, just because I had the 1 minute interval on when I meant to have the 30-minute interval on. So Zoom is bullish at the time of this video. Docusign is bullish as well. DG bullish as well. FedEx at the time of this video is bullish. And the 30-minute chart just gives a better indicator of that, opposed to the 1 minute chart that I was looking at. So it is bullish as well, starting a downtrend. Hopefully they'll go back up and test that 295.61 value. Amazon is bullish, so not bearish at the time of this video. From looking at that 1 minute chart compared to the 30-minute chart, I think 30-minute chart is a better estimate of what the company is. So it is bullish at the time of this video. We look at NEO, they are bullish. And we look at Square, and they are bullish as well. All right, so good luck to everybody out there trading this week. Hope you're able to lock in profits. Drop a comment down below. Tell me what stocks you guys are looking at. Tell me if you're able to secure profits. If this video is helping you, make sure to hit that thumbs up button. Definitely helps the YouTube algorithm. And I'll see you guys next time. Peace.